Hi, my name is Andrew Pang. Welcome to another edition of CMS Forex News. Today's Tuesday, August 19, 2008. In New Zealand, producer prices surged in the second quarter. Output prices were up 3.5%, the highest since 1985, and input prices rose 5.6%. Electricity generation was the main culprit, along with higher prices for fuel. Australia's meeting minutes gave more detail into the thinking of policymakers, though the main point remains. Domestic demand has clearly deteriorated, and the scope to move to a less restrictive monetary policy is increasing. The Aussie-Kiwi pair continued its fall that has seen this pair drop from 1.30 to 1.22 in the last month. Traders are pricing in future interest rate cuts by the Reserve Bank of Australia, while higher than expected inflation from New Zealand means their central bank may have to slow the pace of their cutting campaign. After setting a high near 1.2290 overnight, the Kiwi gained 100 pips to test 1.2180. The Bank of Japan kept rates at 0.50% and said that economic growth has been sluggish against the backdrop of high prices for energy and materials and weaker growth in exports. European stocks were down overnight, led lower by financials. Investors are again concerned about future write-downs as a result of credit market woes. Carry trade pairs such as the euro-yen and the pound-yen fell in favor of the yen. The euro slid to test 160.90, capping a four-session decline. However, New York trading saw a rebound in the euro's fortune as it rallied 120 pips to test 162.25. In fundamental news, German producer prices accelerated at a fast pace in July, far above expectations. Prices on the month were up 2.0%, and on the year, prices rose 8.9%, setting a new 27-year high. The data will add pressure for the ECB to hold rates at 4.25%, a 7-year high, even as the economy hits a period of serious slowdown in the third quarter. German investor confidence improved more than expected for the August period, rising to negative 55.5 from negative 63.9 in July. The increase in sentiment was led by falling oil prices and a slide in the euro, which will make European goods less expensive abroad, helping exports. The Eurozone as a whole saw a similar improvement. Just when the U.S. housing market was showing some signs of recovery, the fundamentals headed back south. Housing starts quickly fell after seeing some gains in June. The annual pace of new housing construction fell to 965,000, the lowest level since March of 1991. New construction building permits dropped 17.7% in the month to an annual rate of 937,000 units. U.S. producer prices for July came in red hot, jumping to an annual pace of 9.8%, the highest in 27 years. Prices rose 1.2% on the month, and both figures were above expectations. Core prices in both monthly and annual terms were also elevated, which means inflation is seeping into the underlying economy and not just volatile items like energy and food. The euro-dollar pair hit a fresh 6-month low overnight near 1.4630 as European stocks suffered but rebounded following the European data. In New York trading, signs of weak housing and high inflation soured the mood on Wall Street, with the Dow Jones index falling by triple digits. Oil was up as well. That combination of news bodes ill for the dollar. After a move down to 1.4650 in the aftermath of the U.S. PPI data, the pair climbed 140 pips to test 1.4790. In Canada, wholesale sales rose 2% in June, 4 times higher than forecast. It was the 5th increase in 6 months and was propelled by strong gains in motor vehicle sales. The U.S. dollar-Canadian dollar, which we noticed yesterday was in a downward channel, fell after testing the new line of resistance. The greenback was pressured in morning trading as U.S. stocks fell. Tonight, Japan posts its All-Industries Activity Index, and Australia reviews its leading index. Overnight, the UK will release meeting minutes and data on money supply and manufacturing. Tomorrow, Canada posts data on retail sales and its leading index. And that wraps it up for the day in Forex News. Join us again tomorrow right here at cmsfx.com.